What is going on, guys, and welcome into the video. Well, the market is just roaring right now. I mean, good earnings are actually being rewarded with positive moves the next day and sometimes big moves up the next day. And even if we take the earnings equation out, the market is still seeing more green days than red days over the past month or so. This is all great, but what do you do now? I mean, seriously, what's next? And just as important, or maybe even more important, how can you screw it all up fast and not even know it until it's already happened? There's basically an entirely new set of challenges laying in front of all of us that many of you guys have never experienced before. So what the heck do you do with all that? Well, I got you covered on all that, as we will discuss it all as we navigate this very unique time in the market that is equal parts exciting and scary kind of all at the same time. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do. Alright, so how many of you guys out there are seeing some substantial green in your portfolio lately? I know many of you that bought the dip in June and July to average down or to start some positions are seeing big time green, or their positions that were down big are now down a lot less and maybe just getting ready to turn green. That is exactly what planning and preparation and execution does for you, and nicely done, by the way, to all you guys out there that did exactly that. But this type of run introduces new challenges and new problems you may not have ever seen before, so we got to talk about that. And I'm actually not saying we are out of this or calling the bottom or anything else. I mean, click these videos up here for my full thoughts and all that stuff. I'm not rehashing it here again. But the rally has sustained long enough that we need to talk about these new problems and challenges that I am seeing pop up in my group and comments here on YouTube as well. I'm kind of basically seeing it everywhere. So how many of you guys feel like you missed it with some stocks? I mean, like Tesla or PayPal or SoFi or Palantir or many other stocks that have run up massively the past month or two. Go ahead and comment below if this is you and what stock it is for you. And what about feeling uncertain to buy now when a stock was so much cheaper just a month ago? I mean, for example, buying PayPal around $100 after it could have been had in the 60s just a couple of weeks ago. And what about that feeling of how to buy in a market where your patience is no longer rewarded like it was before, where if you waited, you got a cheaper price? But now it seems like if you wait, it's going up more and you will pay a higher price. Basically, we've gotten so used to buying a red market that it feels like that strategy to buy the red market doesn't work anymore in this market. All three of those are very valid, and you need to learn how and what to do when the market does go back to being a bull market again, because that time will come, guys, so it's important for you to know. Now, I have no idea if the bottom is in or if the bear market is actually on its way to being over or anything else like that. We may actually have another epic drop coming that none of us can see. Even the people that are predicting it, sorry guys, they really can't see anything and see into the future either. It's all just a guess, and I'm not guessing for investing, and I'm not a trader either, so I can't help you there either. I just know that guessing is a terrible idea. But as a long-term investor, I can speak to how to execute the same strategy we have been executing during this downturn in this market now and in the bull market that will follow. That much I'm confident of, that we will have a bull market that will follow this down market. But you can screw it up too, but first let's start with what to do and then we'll get to that stuff. The concept is actually exactly the same as in the down market. It's just applied to a more bullish market, which seems confusing, but it's really not. And that actually seemed like a little bit confusing way to say it as well. Sorry, I don't know how else to say that any better. It just, you gotta trust me. Just flow with me through the rest of the video here. Anyways, when it's doom and gloom, you need to zoom out and see the light at the end of the tunnel. And to see that opportunity, you have to zoom out. You can't do it otherwise. And guess what? We need to do the same and zoom out on those green rallies so we can see how far away we are from our actual goals and see how cheap stocks actually are from a big picture perspective. So I'm going to use PayPal as an example here to illustrate it. If you've been following PayPal since last year, we'll say, how many of you all would have given anything to get PayPal under $100 at the beginning of this year? That happens because if you're like me, anything under $200 is a deal, and under $150 is a steal deal, and under $100 is just flat stupid. And at the time, man, you really didn't think it was going to go there. That probability would have been very, very small. And guess what? We got it even better than that. We were all able to add shares multiple times in the $60 range. But now a lot of people feel like they missed it, or on the flip side, they feel like they want to buy it back at that $60 or $80 or whatever that lower price was that kind of has them kind of hung up now. Maybe it's because you added multiple times in the 60s, like my group did, and like I did, and like a lot of you guys did too, and it just feels wrong to buy now at around $100 or so. It kind of feels like you're making a bad buy because the earlier buys were just so good. Don't fall for that at all. You are focusing on the past, not the present opportunity and where it fits in kind of the grand scheme of everything. If it truly is a $180 to $200 stock based on valuation in your opinion, Why the heck is buying at 100 suddenly bad? It's not bad at all. It's just your mindset and looking back instead of forward that's creating the bad scenario. Hindsight always wins. You're going to find mistakes because nobody makes the perfect trade. Nobody buys the bottom perfectly, but hindsight will actually make you feel like you were the only one who didn't buy the bottom perfectly. Look forward and zoom out and look at your plan. Where did you have PayPal's valuation in 1 year, 3 years, and so on? If it's 100, then obviously it may not be a buy for you or it may not be the right stock for you. But if you see it at $300 based on your growth estimates and the valuation you placed on it, or even if that's $200, whatever number you placed on it, why is $100 suddenly a bad price? The strategy of buying the dip still works even if the stock is not on as big of a dip as it was before. You most likely will never buy the circles, just the arrows, and that's why I keep showing this chart, because you got to understand those arrows are most likely where you're going to buy, but those can all still be great buys in the end. And if you're not comfortable with all that, just execute a simple DCA. It is absolutely a winning strategy. But choosing to sit out because you missed it on a stock that is sitting at a 50% discount is not a move I would make. Simultaneously, you need to keep your long-term goals in mind by again zooming out and looking at the big picture and your goals long-term. Now, yes, I agree. It's great to see progress on goals. I agree with that completely. But if you set out to lose 100 pounds, for example, seeing the first 10 pounds fall off is exciting for sure, but you still have 90 pounds to go, so you need to stay focused. And there will be trials and tribulations and setbacks along the way to getting those last 90 pounds off. It just doesn't fall off every week the same amount the same way every time. There will be hurdles and obstacles, and you will take a step forward and then 2 steps back at times. The same applies with the stock market as well. We are 10 pounds into a 100-pound journey. And guess what? It's not going to be just one sustained rally week after week after week until we get there. I wish it was that simple, guys, but it just isn't that simple. So how the heck can you screw this all up and not see it coming ahead of time? Now remember, before I even give you that, this is all coming from my own personal experience and the experience of watching other investors make these mistakes too over the past 20 years. I'm not criticizing, I've been there and done that, and I struggle to this day sometimes with it. So after being beaten down for so long, all of a sudden you turn green and have a great earnings call or, a nice sustained rally or whatever, like we have going on right now, and the good idea fairy shows up and she is saying,
take some profits. We're not out of the woods yet, so it will probably fall again. Just sell and enjoy your gains and then buy again cheaper.
The problem? Your plan says you think the stock will be a 200% higher from the lows in 3 years, but now you are tempted to sell and take a 20% or 30% gain instead. Fine, if it's a swing trade, that may make perfect sense. But if it's a long-term hold, I personally would not do it. I have played this game before, sacrificing a 7-figure gain for a $600 profit. That's what it cost me to take profits on Apple back in the day, and it still hurts today. That's why I continue to hammer home that example. And if you think you will sell, take your gains and buy the dip and rinse and repeat, then you are simply market timing or you're poorly executing a swing trade. That doesn't sound like the best idea to me either. You spend days or weeks studying, creating a plan, laying it all out, and then executing. And sure, absolutely, plans change, but plans shouldn't change just because you saw a nice run in your stock. Just like your plan shouldn't change if you get a big dip in your stock. Maybe if it's a low conviction play caught up in a hype rally like we saw last year, then it may make sense to sell. But otherwise, you are playing a losing game in the long run, in my opinion. Also, I'm not buying these stocks to make 10 or 20%. That is what large caps are for when they get beat down. I'm buying these stocks at these depressed levels to double my money or more in the coming years. Instead of selling and then having to create a new plan and a place to put the money, why not spend that time focused on increasing your income so that if that great stock dips again, you can add more and still get to keep your original shares and avoid the tax hit and everything else. But more importantly, you're going to be relieved of the pressure and the stress of getting in and out of positions and becoming a trader. You cannot do both. You are either a trader or a long-term investor. Now sure, absolutely you can have a portfolio of money that you trade with and others that you have basically for all your long-term holds. But if you're thinking about turning long-term holds into trades, you might want to look real hard before doing so. Keep all this in mind over the next few months as the market turns, if it continues to turn, so the good idea fairy doesn't show up and wreck your portfolio. And if you want to have myself and a group of 6 and 7 figure investors helping you through this chaos, and you want direct access to me and a ton more, check out the pinned comment for more details and to get your spot right now. And click this video here to see what I'm selling in this market, and click this video here to see how I plan to make big money in this downturn. Thanks for watching, and we'll see you in the next one.